Wall Street ends lower. Key indices erase early gains as the Fed minutes stoke recession fears. Despite a cooler than expected inflation print, stocks give up gains made earlier in the day as investors cheered cooling prices. Asian markets largely lower after a weak handover from Wall Street as recession fears offset investor cheer over a soft inflation print in the US. The SGX Nifty also signals a negative start for the Indian market. And inflation slows to a 15-month low in March. CPI inflation drops to 5.66% thanks to a sharp drop in food prices and the base effect. Industrial output in February grows by 5.6% in line with estimates. And TCS reports an earnings miss for the fourth quarter. Dollar revenue growth and margin both below estimates. In constant currency terms, revenue growth drops to an 11-quarter low. K. Krithivasan will take over as the new CEO from the 1st of June. The earnings season gains steam with Infosys set to report Q4 results today. A CNBC-TV18 poll suggests the IT bellwether will deliver constant currency growth of just 0.45%. The street will also closely watch any impact on its BFSI business and hiring plans. Hi, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you. There's lots that's come through as far as the global picture goes. For our own markets, we've got the first of the big results which have come through. So we have ourselves a packed show. But before that, let's just quickly go through how the global markets are really reacting to all of the news flow that came out. So we did get a pretty weak handover from Wall Street, and on the back of that, you have most of the Asian markets which are trading with cuts. The only ones which are managing to just about hold in the green are the Nikkei and Kospi markets. No big gains there either, but managing to hold in the green for now. The sharpest cut is definitely coming through for the Hong Kong market. There you have it on your screen, 330 points lower there. So over 1.6% gone. Taiwan also down around 0.4%. It's looking quite weak across the board. Shanghai is down, Straits, all of these seeing some cuts. But let's also bring the SGX Nifty up for you. After that good session that we saw yesterday, it is likely that we get a bit of a soft start right now. It's around 12 points lower, quite flat. But like you can see on your screen, it has also come up in the past few minutes. So that's how the SGX Nifty is faring. But let's also talk about the US now. All right, Steve, thanks a lot for bringing us all of those highlights from the Fed minutes. That's everything that we're tracking globally and reacting to all of these important cues. We had Wall Street, which ended Wednesday's trading session lower. So the Dow was down 38 points. We had the S&P, which was down around 17 points at the close, like you can see. And the NASDAQ composite closed with cuts of over 100 points. So it was definitely the Fed minutes towards the end of the session which really weighed on sentiment. But that's what's happening globally. Let's talk about all of the cues that you need to track as we get into this trading session. We have our research team here with the setup. Mangalam, Sonal, as well as Surbia here to prep you up for this trading session. Guys, a very good morning to all of you. Sonal, take us through what we should track in terms of cues for the market. We were just going through the global picture, and it is likely to be a lot about that.
Oh, yes, absolutely. And if we look at what the big cues we got from the US markets are, that's the CPI print. US CPI came in at 5%. That was slightly lower than what was expected. But the other thing is that Fed officials now predict a recession. So it could be a tug of war between inflation, growth fears, and a lot more as far as US economy is concerned. So the next action from Fed is extremely important to watch out for. Wall Street, on the back of this recession fear that we are speaking about, closed lower. Dow, in fact, snapped its 4-day winning streak. NASDAQ was lower by 100-odd points. Asian markets should also come up for you on the screen, largely lower today. So we have Taiwanese index sitting with cuts of 0.3%. Hang Seng is down 230 points. It's all because of the weakness that we have seen in the US markets as well. And SGX Nifty, that will also come up for you on the screen because that one is indicating that the start for our own markets could be slightly weakish. Now, as far as our own markets are concerned, well, we saw 8th consecutive day of gains for Indian markets. Nifty is up 4% in last 8 trading sessions itself, and gains yesterday were led by pharma, IT and FMCG names as well. IT stocks, they are of course in focus because TCS has missed revenues and margin estimates, but the order book idea is quite firm for the company. FIIs, they bought again in cash markets yesterday, 1,900 crore rupees yesterday. In April so far, they've been able to buy 4,700 crore rupees. Now, as far as our own CPI is concerned, it has come in at a 15-month low at 5.66%. So that, of course, is a good number to watch out for. We have results today coming in from Infosys and results over the weekend coming in from HDFC Bank. So a lot of domestic cues as well that we'll be watching out for.
All right, a lot of domestic cues as we get into that long extended weekend as well, right? Sona, thanks a lot for that. But let's now talk about all of the stocks that could be in focus. We all know TCS is the big one, but Surbhi is here with the entire list that you should keep on your radar. Hi, Surbhi.
Hi, good morning. Thanks for that. First up on my radar is, of course, TCS. The company misses the mark for the fourth quarter. Revenue and margins both missed estimates. The revenue was up 1.7% sequentially and net profit was up 5% sequentially. Anand Rathi Wealth also reported its Q4 numbers. The revenue was up 4% at 143 crores and PAT was constant at 43 crores. Moving on to AU Small Finance Bank, the RBI approves reappointment of Sanjay Agarwal as MD and CEO for the next 3 years. Karnataka Bank, RBI approves the appointment of Shekhar Rao as interim director and CEO for 3 months. He is currently an executive director. BHEL signs an MOU with NPCIL for collaboration over pressurized heavy water reactor-based nuclear power plants. And lastly, RVNL, the company receives an order worth 64 crores from Northwestern Railway.
All right, Surbhi, thanks a lot for bringing us all of that stock-specific action. Let's also talk about the cues from the futures and options space. Mangalam joins in with that. Mangalam, we've been slowly building on gains over the past few sessions. Take us through everything we should watch.
Yes, like they say, first slowly and then suddenly. 8 days and we are up almost 800 points on the Nifty. In fact, the FIIs have been, powering this market ahead, buying for 9 days in a row. And yesterday as well, the purchase was close to around 1900 crore. But the biggest story is the way the FII shorts have been caught on the wrong side and they've been covering their positions as well. Yesterday too, we saw the FIIs purchase almost 1700 crores in index futures. And here too, majority of that was deployed towards covering short positions, 11,000 short contracts covered. As a result of which, in last 5 sessions, the FIIs have covered almost 72,000 short contracts. In fact, at series start, the FII net short contracts were 1.38 lakh, and now that's compressed all the way down to 0.42 lakh itself. Mind you, they're still net short to the tune of 65%. Longs have inched higher to 35% from 9% at the start of the series. And in this week itself, it's doubled in its exposure. But important to see whether this momentum sustains or whether we run the risk of getting into some sort of resistance. Why do I say that? Well, because one, there's weekly options expiry today. Secondly, FIIs have been writing puts left, right and center. At some point, these put writers will also be caught on the wrong side, just the way call writers have been caught on the wrong side. Yesterday, we saw the 17,700 call writers cover their positions, 17,750 call writers also run for cover, and some action at the 17,800 call, telling you that we did see some sort of resistance around that 17,880 mark. The 17,800 put writers and the 17,750 put writers have brought together 1.1 crore shares in open interest in just yesterday's trading session, and the put call ratio has now moved to 1.27, slightly overbought. And all of this ties in with the Nifty 100-day moving average along with the Nifty 100-day moving average, both of them just a couple of 100 points away from here. So will that be a resistance, or will crossing this cause further short covering, is something that we'll find out.
All right, we will find out. For now, it is looking like a bit of a weakish start, just around 15 points lower on the SGX. So let's see how it moves from there. But that's all of the cues that you should track as we get into this trading session. For now, we are going to get into a break. But inflation slows to a 15-month low in March in India, while industrial output in February grows 5.6%. We'll get you the complete picture when we come back. Welcome back to Power Breakfast. Now, the big domestic macro cue to track. Inflation has slowed to a 15-month low in March in India. So the consumer price index has dropped to 5.66%. This is largely thanks to a sharp drop that we've seen in food prices, as well as, of course, the base effect. As far as industrial output goes, in February, it has grown by 5.6%, which is pretty much in line with what we were expecting. Lata is here with all of the details on this. Lata.
Yes, sir. Inflation is not only in line with market expectation, the big relief is it's way below the 6% threshold, which the MPC is, mandated to keep inflation below. So 5.66, that way is a big relief for RBI and MPC, considering that they have paused. The reasons are not are not a mystery. After all, there was a base effect. March of 2022, prices had gone through the roof, food, edible oils and cereals and wheat because of the Ukraine war. So base effect was anyway going to bring the inflation down. The additional cause of relief for the Reserve Bank and the country is that cereals are down. That was the big fear, that because of the heat wave or the unseasonal rains, whether the cereal prices would go up. The fact that they've gone down month on month is a big relief. Edible oils were always expected to be lower. That's another factor pulling it down. Perhaps the only fly in the ointment is milk prices. They are up 0.6% month on month, but that was on expected lines. Pulses are also higher. So really there is a protein inflation element for sure. The bigger relief is that core inflation is down to 5.8. You know, RBI has been repeatedly pointing out to the persistent core. So this will again come as a relief. Overall, it kind of vindicates the Reserve Bank stand that maybe we should pause and look ahead. Now, the expectation is that both in April and May, inflation will fall below the 5% mark also. It will be 4 point something because of a huge base effect. April of 2022 was 7.79% inflation. So we will definitely get a base that will push the inflation closer to the 4% mark. So unlikely the Reserve Bank is going to raise rates in the June meeting. So clearly it looks like the peak of the current cycle has been reached, at least as of now. A word on the IIP number, it's a good number, 5.6%. It is on expected lines, but what is important to note is it is investment heavy. Infrastructure and capital goods are the two elements that have done very well, including power. And the ones that have not done very well are consumer durables and even consumer non-durables. Although it shows a growth, it's a very low base, so we shouldn't be impressed. Consumption is still weak, you will have to admit. That perhaps is the only disturbing element in the macroeconomic numbers.
All right, Lata, thanks a lot for bringing us an update on all of the macro data that came through on the CPI as well as IIP numbers. But with that, let's move on to the earnings now, because it is the first with the big ones. Like we told you, IT Bellwether TCS reported its fourth quarter earnings last evening. So Rima is joining us with the earnings report card now. Rima, take us through how the numbers looked.
TCS misses the mark on revenues and margins in Q4. Constant currency revenue growth of 0.6% is lower than consensus expectations of 1%. Margins are flat at 24.5% versus the company's guidance of margins of 25%. The management in the press conference said that the client sentiment weakened in the month of February and March, impacting the revenues and margins. And while budgets are not being cut, there are no large-scale project cancellations. Discretionary projects are being put on hold, and the client sentiment appears to have weakened marginally. So there is a miss on revenues and margins this time, and that's a bit disappointing. And even the near-term visibility, particularly in North America, appears to be a bit clouded. Internals, BFSI growth has slowed down to 9.1%, so that's a bit of a disappointment. Retail continues to hold up well. The order book has been very strong at $10 billion. In fact, the company has clocked in the highest number of large deals this quarter. So the order book is holding up very, very well. Attrition continues to tick lower, 120 basis points down on a quarter-on-quarter basis, while the hiring number has been fairly muted. About 800 employees have been added on a quarter-on-quarter basis. K. Krithivasan will take over as the CEO and MD from 1st of June.
All right, Rima, thanks a lot for getting us a complete roundup of how TCS really fared in the fourth quarter. But let's also listen to what the management had to tell us after the company's earnings.
This quarter has definitely come in weaker than what we originally anticipated, and primarily coming out of North America. North America had slowed last quarter, but our expectation was that it is a cautionary stance from clients, and based on our discussions with clients, and we had expected that it will bounce back into the first few months of the new year. That has obviously not happened. Calling it forward is difficult, so we are doing what's in our control in terms of positioning ourselves to be able to handle it on either side of it.
From a margin perspective, what we, like Rajesh pointed out, what we saw at the beginning of the year and how the macro environment as well as client sentiments turned increasingly negative getting into February as well as into March is something what reflected both on the revenue side and on the cost side. And if you look at it with discretionary spend getting impacted, the revenue gets impacted immediately.
So on the BFSI side, last quarter itself we had called out there are some, because of the interest rate and inflationary regime, like there have been issues in the insurance sector, capital market and mortgages. What changed this quarter more than anything to do with inflation or interest rates is sentiment, right? Like what happened with one in the banking sector. The sentiments were quite down and people are all not sure what's going to happen. And so there was a greater rush to preserve costs.
All right, that is the TCS management. In fact, we will also be speaking with the management of TCS first at 8:25 a.m. for an in-depth chat and then at 8:40 a.m. today. So remember to stay tuned and catch that conversation right here on CNBC TV 18. Welcome back. You're still tuned into Power Breakfast. And as always, we are going to discuss what's going on with commodities now. Manisha joins us. Manisha, what are you talking about today?
Pavitra, I'm looking at the crude oil prices. So even with a bit of a profit taking right now, we still are trading at a 5-month highs for both the crude varieties. We have seen 2% of gains in the overnight market. The U.S. may start refilling the U.S. Strategic Petroleum Reserve, which right now are at November 1983 lows, seems to have triggered the markets on the higher side. Apart from that, the IEA report also says that the OPEC-led output cut could lead to tightness in the second half of this year, and that has been supportive. And then the markets are looking at better Chinese demand going forward as well. Not just crude, you have gold, which continues to hold above $2,000 per ounce, and silver right now is trading at a one-year highs as well. So good going in many of these commodities.
All right, Manisha, thanks a lot for taking us through all of that commodity action. With that, we're going to wind down on this edition of Power Breakfast with the news that a lot of the Asian markets have actually recovered a fair bit in the past few minutes that we have been talking. So Hang Seng has recovered more than 150 points, but it is quite mixed across Asia right now. The SGX Nifty around 15 points in the red. Thank you for tuning in. Bazaar comes up next.
Brought to you by